first one would be Nayla and Wilson. So if you guys would come on, I'm going to give you a little introduction here because I had to think about you when Dave was talking about people that take the 2-day class, and he wants you to take action. Don't be held down and marred down by fear. And I got to tell you, they joined in October of 2020. They reached out to us in October of 2020. Isn't that right, Nayla? And they already had a deal they were contemplating. I said, I've never heard of you yet. We haven't met. We haven't talked. What are you doing? But you know what? They took action, and they brought us in the loop, and it was a phenomenal thing. And we're going to talk about that deal today. So Nayla and Wilson, thank you so much for being with us tonight. And if you would, can you tell us a little bit about yourselves pre-Lifestyles Unlimited?
So we've been in Dallas for 14 years. Wilson is a physician, and I retired from medicine quite a while ago, so it was time for me to start looking for something else. So the last 3-4 years, I've been looking for a business, anything where I would feel fulfilled. And I was buying what Dave was referring to as a turnkey business. COVID hit, thankfully, so I canceled my contract. Otherwise, I would be a very happy owner of a building and restaurants with probably no clients and, struggling. And so Wilson has been telling me for the last 2 years, you need to go into real estate, you need to listen to lifestyle. And I keep telling him, no, I'm not doing this. And we finally did it. But yeah.
Yeah, which brings us to that next slide. Why did you join? And I love that first bullet point because Wilson was bugging you. Now, Wilson, you were listening to the radio show, I assume?
Yeah, occasionally. Not only that, but one of my patients is a member of the Lifestyle. So that's where I got the idea initially. And I kept telling Nayla to join, and finally it happened.
I mean, we tried to acquire real estate before joining Lifestyles, and I was struggling, and I had a great agent, and I still work with him, but just wasn't sure how to build the portfolio. And so he finally just signed up for the free seminar and just didn't tell me, and said, oh, come check this out, and made me sit next to him. And then it wasn't even done. He said, okay, so I'm signing you up for the 2-day seminar. And at that point, I was like, you know what? It all made sense. What do I have to lose? Like less than $300? I'm like, I would be crazy not to do it. And if I don't like it, I don't like it, and it's fine. And before the end of the first day, I joined. I became a preferred member because it just was so logical and was really, it was self-explanatory, and I felt like it would be crazy not to do it.
So real quick, I know, Lori, I'm just saying, you joined on in October, so that's when because of COVID, I was doing the virtual ones. So you did it totally virtual, just the same seminar like I'm going to teach this weekend. That's where you guys learn how to start doing this, correct?
Correct.
Okay, I just want to make sure.
We've only been to virtual events.
Okay.
Yeah, really exactly the same situation as we're in right now. It was all virtual. And I love how you just made lemonade out of lemons, saying that you were happy that the pandemic hit, because it turned your direction a little bit. And so, Wilson was listening. He kind of encouraged you. You were looking for something, unsuccessful in your other attempts. And so it all really came together. What you had mentioned too is that you joined you became a preferred member, and there again, you joined hook, line, and sinker. You wanted to do multifamily and single family. I do the same as well. That wonderful job that Dave was talking about, a passive investor in multi, best job you'll ever have. But single family is so fun. It's so, I just like it. And so I don't want to give it up. So I just keep doing that. And then it keeps me in the game to help people like you that come to me with their first deal before ever talking to me yet. So I had to scold you a little bit first, right? But then you wound up doing really, really well, and you had already started your education. So let's go to that next slide and talk about what you were able to procure and how you got this property.
So this was through Lifestyles. It was through email that Michonne sent. So I headed over to the property to see the property, and she had advised me that I should probably go with a contractor to make sure that I would get the proper repair value. So I did that, and the property looked great. Did not look like it needed much. It was updated. Everything looked really good on it. So I'm really grateful I put an offer down and was selected for to purchase the property.
How long have you been a member before you responded to that email that was sent out on this property?
Probably a month.
How long?
1 month.
1 month. Okay. So within that first month,
Yeah.
because I thought this was right around October-ish that you got this. And we've got a lot of numbers over here to the side of the slide here. I want to point out there, when you talked about bringing a contractor to the property, this was a rehab. You'll see there in the middle of just $700. So it was minimal. You didn't have to go in and add a lot to it, really buy something that was distressed and then really spend a lot of time fixing it up. And yet over here to the right hand side by Michonne's lovely picture, you still gained $16,000 in unrealized capital gains. Basically that property's worth more than what you paid for it at 167. So I mean, right there, boom, right out of the gate, you've just been successful after all those other attempts. Tell us a little bit what you're doing with this cash flow and how you got your tenant and things like that.
So I just want to add, so the reason why it took me 1 month, it's not even because it was hard to find that property. It's because I really wanted to focus on multifamily. So I did all my multifamily education. And when I was done with multifamily is when I started. So really, I found that as soon as I started being interested in single family. So it was even quicker than what I'm saying. So during that month, I educated myself and I did all these things to make sure that I would make the right decisions. Mm-hmm. So the cash flow is 408, and in David's seminar, he says how, like, he starts saying, well, this pays for this thing and this pays for that thing. So it's really funny because it's about the car payment for my second kid. So when we saw that, we were kind of amused because we were like, oh, well, that's what it means to pay, to pay down your expenses, is that now this house is paying down that car payment. And so in terms of how we found the tenants, we used OmniKey, and they advertised the property. They they took care of everything in terms of getting our tenants. Mm-hmm. And then I'm taking over the management. But to me, I didn't want to find the tenant. It was something that's not necessarily of interest to me. It's not in my wheelhouse. It's a property that's 45 minutes from our house. I didn't want to have to drive there every time somebody would want to see the property. So I chose to use that property management. But now it's fairly easy and there's not much to do. Something went wrong during the freeze, called the handyman, went there, took care of it. So in that respect, it's easy to take care of.
Absolutely. It's about using your team. So even though you're managing the property yourself, you're using the team. So you're still not working in your business. You're still working on your business. And Dave talks about that. It's a fine line between, some people might say you're working in your business if you're managing your properties, but you're not if you've got a team established and you're working. So you're following the model exactly right. You're keeping that money in your pocket. That $36,000 cash out of pocket that's shown here on the screen, that's giving you, with just the cash on cash return, the cash that's coming in with positive cash flow each month, a 13.4% return. So that's phenomenal. It certainly wasn't making you that in the bank, now was it?
Absolutely.
Dave, let's go to the next slide so that it can talk about the beauty of this house inside. It's really quite a nice house.
And you know what else?
I didn't hear you.
Nayla, right? You're making a 44% return on your capital gains. That's pretty good. Did you think were you making like 44% on your capital gains in your stock market right away? And
Never.
that 13% tax-free cash flow is pretty good. So not bad.
Well, and I hate the gambling aspect of it. So this to me really spoke to me. This was perfect.
Mm-hmm. It's done up very well. It looks like it's the typical rental model that we talk about. And so you went in, it's a good, reliable house that a middle class or, you know, someone that is in working class family is going to be able to afford and live happily. It's a win-win situation.
Yeah,
So
and
you
for
didn't
folks,
necessarily have to do any of this yourself though, right? This was already done. This is how you bought it?
So it was, yes, it was done. So I think what played in my favor is I'm able to look past things. So the house was lived in and there was stuff everywhere. So even to walk through, you had to walk over things. So to be able to see past these things and to have to see the potential of the house and to see that the bones were there, that, you know, had granite countertops, the appliances were fairly newer, the roof, everything was within 4 years old. So I love the idea of not having a property that I would get major issues with. And so it ended up being a really good house.
Wonderful, wonderful.
and one thing I want to bring up, guys, we have people from all across America doing this, right? So they're all coming in. So even though she's in Dallas, think if you're a member from California, you could have bought this house. It's pretty much turnkey. It was an easy deal. So distance doesn't matter as well. I just wanted to bring that up because we do have people from California watching. I mean, look at that beautiful bathroom. I mean, that looks as nice as my bathroom. So, I mean, that's a home run, an easy deal for your first one. I like this. It's a great one.
Okay, so we were talking about the team, Nayla and Wilson, and there again, you know, we had a team built for you basically. You got to pick them. You're the one that, you know, they're not chosen or selected by us just because they're on our vendor list. We just put together capable people from which to choose and select. And so you really didn't have to do too much on that. We certainly wanted to give them credit here on this slide so that those that are already members will know and go to the vendor website and look up some of the details on these folks that helped you out. That's how we learn about some of the really good vendors out there. Do you have anything to add about these?
Every person that I worked with was amazing, and it was great how quickly, like, you know, you go on the top of the list. When you call and you say you're with Lifestyle, so it's different rates and quicker calls or appointments.
Mm-hmm.
So that was really, really remarkable, because that's also something I was fighting against when I was trying to do it on my own, was the delay in getting any work done or getting somebody to come and see the house or get a bid. It was such a different experience. It made it so easy to have somebody say, oh, you're in Lifestyle? Okay, well, I can be there tomorrow by this time. Does that work for you? So it was absolutely amazing. So everybody was super responsive. The rates were amazing. I used to pay $425, $450 for an inspection, and with Greenworks I was at $297. And I thought I was getting a great deal with the other inspector. So it makes such a big difference in having a good team. And integrity was great. They again gave me an amazing rate for the insurance. But that's, I mean, everybody on that list was just so responsive, and the prices were impressive.
Yeah, that's good to hear. And you know, you don't know what you don't know. So you could think you're getting a good price and you don't know. And the good thing about it is that even though this was your one and only house, they treated you as a serious investor because you've got the volume of the whole team. They know that Lifestyles is important to them because all of us collectively give them lots of business, and we do have some buying power there. And you get benefit of that, whether it's one house or 20. So I like to hear that.
Absolutely.
Let's go this next one though, because this is where the fun stuff comes in. I love that you were considering commercial property when you changed around your thoughts. So tell us about how your life has changed.
I have direction, and having mentors I can reach out to, and having people guiding me and knowing that I'm not going to be making a mistake if I follow the guidelines gives me a security, because I don't want to play with our family money. I mean, we do want to retire at some point, and I don't want to take silly chances or lose money. And by having these mentors, I mean, Rick has been great as well, and having people guide me the right way and just following the guidelines from Lifestyles gives me that security that I'm doing the right thing and I'm going to be going towards our goal and building our future. And our kids have started being involved and they want to do this as well. And so we wouldn't have been able to do that without the education and without the principles of Lifestyle.
Yeah, well, you're establishing a legacy for your children. And you know, when you're talking about how your life changed around from that commercial property, Dave had brought that up a little bit earlier too. He said that our model is to invest, whether it's single family or multifamily, it's still in residential because people always need a place to be. But those commercial endeavors, they're a little bit risky and dependent a lot more on the economy and things that can hit. So I'm very glad you went with the residential. And I know one of your goals is to retire Wilson, who's not speaking too much. So he's very, very lucky to have you here taking this on while he's working away. I'm sure you're still contributing a lot, definitely. But tell us a little bit about what you're doing here. What's next?
So we want to keep paying down our expenses, obviously. I continue to educate myself. I registered for the IROP certification. My goal is definitely to have more multifamily investments. We have one passive deal, but we want to keep investing more, and we want to keep getting more single family homes as well. Our kids are getting involved in the picture. Down it's Wilson with our older and youngest that are digging a hole at that house in Halton City. And our middle one was with us this past week when I went to see a small apartment complex and meeting with the contractor, and she was she loved everything about it. So it's to get them educated as well and get them involved and have that as a security for them to have something besides their career. So if at some point they wanted to not work as much, they would still have passive income coming in.
Oh, absolutely. Absolutely. And, you know, you had mentioned IRO, and David mentioned what that acronym is a little bit, independent rental owner. So you actually, that was one of the things when you said that a combination of single family and multifamily interests you because you wanted to jump in and just get your feet wet with residents, how to handle residents and leases and things like that so that you can manage your own small multifamily community is what you're hoping to do. And that's great. Yeah. So who do we have as our moderator for the questions? We'll see if any of you out there have some questions. Hi, Danielle.
Oh, yes, we have a couple of really good questions here. So the first one that I have is from Natalie, and she said, did you use hard money loan?
I did. So I had to use hard money because it was a wholesaler and they want to close quickly. So I got a hard money loan and then switched to standard mortgage with KBS. And both were very easy and super great to work with. Very
call
straightforward.
that the Texas two-step.
Perfect. Next question I have is from Kenneth, and he said, who came to let me start over here. Who came to the initial showing with you? Was it Greenhurst?
So at the initial showing, we were given a time and date, and the wholesaler was there. So we got the information and the time to show up, and we had very little time because the house was lived in. So I want to say it was a half-hour window, and there were a lot of people. So nobody necessarily came with me, but I was in touch with the Lifestyles realtor, Michonne, and emailed her after, gave her my feedback, gave her my offer. And like I said, within half an hour, we got an answer and we had the contract going.
Perfect. Next question I have is from Denise. And Denise said that the Dallas-Fort Worth market is really hot right now and houses are selling in one day in the middle class price range. So, and so much more, wait, sorry, there's no punctuation. And for much more than last year's multiple offers over asking price. Does this change the Lifestyles model? So I think they're asking because things move so quickly. Lori, does it change the model?
Yeah, that might be something hard for the newer folks to address. Dave might have some comments on that as well. As for me, I know that anything that's good is going to be in high demand. So if whether it was back in 2008 or 2009 when there was a glut of inventory, then there were more investors. Everybody wanted those properties. Now there might be less investors, and because people have cold feet, they think they're those type that don't want to find a way to say yes, and they want to sit on the sidelines and say, I'm not going to try for it because I'm never going to get this house. When you're connected, when you know what you're doing, when you're prepared to jump and make that offer as Nayla and Wilson were, then you know what? It's like going up to bat. Sometimes you're going to bat and you don't get that. You might have to make an offer on 6 or 7 houses before you get one. But it's a numbers game, and you got to keep going up to bat. Don't quit and be a loser. So.
And that's why I say people look for a way out, not a way in. Anchors are engines, and I'm always going to be an engine no matter what, guys. I have bought properties in 2009, 2010, 2011, 2012, 2013, all the way up till 2020. I bought properties every year. And guess what? It's the perfect market every year. You make your own economy. Lori sits down with you, will analyze that deal and say, that's a great deal. You know, that fits within your parameters. You got to make that decision whether you want to do it. But what is my numbers I've been teaching since 2009? 8 to 30% return a year. You know, that's what we look for. And boom, they were right in there. 200 to 600 cash flow. So whether I taught the seminar 10 years ago or now, it's the same numbers, guys. There's great deals all the time out there. We're always seeing deals within those numbers. It hasn't changed. Here's a member, joins up, boom, they're in a property within 30 days. There's plenty of deals out there if you're a go-getter. The 80-20 rule in life. 20% of you will step up. 80% will go back to your job, your 401k, your IRA, making excuses. When you sit there and hear it's an oversaturated market or whatever, I say no, go out there and look harder. You will find deals. Okay, I have members that buy 10 properties in a row. These guys are go-getters. They went out there, boom, within a month they're already in a property. So they weren't afraid. They didn't hear all the excuses out there. Stop looking for a way out, look for a way in.
And let me say, though, that was an excellent question to ask. I mean, that's a very valid question. We're not saying that just because the question was posed that they're not a go-getter. Absolutely a fantastic question for this. One that I would have asked myself. So thank you for
But there's plenty of deals out there.
Sorry. Yeah. I'd like to add something. So I put offers on houses maybe once a week or once every other week, and very often it's above asking. I have a deal now where I'm just waiting for probate to finish, and once that house is remodeled, I have over $50,000 in equity. It's a question of just sticking to it and keep doing it and not get discouraged, because like Lori said, it's a numbers game. You just have to keep at it. So now we just have one house. My goal is by the end of the year, I would love to have 10. And if I'm not going to keep working at it, it's not going to happen. So yeah, it's not easy, and the Dallas market is really hot, but if you're not going to keep at it, it's not going to happen.
Yeah, do or do not. There is no try.
Absolutely.
Next question I have is from Bill and Nancy, and they said, Nyla, does the $400 cash flow, is that after paying a property management company?
So I'm not using a property management company. I just use them to get the renter. So no, it would not be after the management property fee.
Yeah, she just had them. She said, I don't want to find them. I don't want to screen them. So she hired a third party to do that, which is OmniKey. Once they did that, now she just collects the rents, which sent to her mailbox. So she figured that's the easy part.
And there again, if someone does not have the personality for it, they don't want to do it. If they choose that, we bake that into the numbers then. So maybe instead of making 408, they make 375 instead of a 13.4% return. They might make a 10% return, and I don't think anyone's going to cry over that. So you do what you need to work out those numbers according to how you plan to run the property. Yeah.
Yep.
I was surprised. It's not very expensive to have a property management company if you choose to. Right. I think it's a 6% that they were quoting.
They might charge you 10% outside Lifestyles of the rent amount. Lifestyles vendors, they just happen to give a discount. I think they're like 8 or 7 or whatever it is for OmniKey. So, there's nothing wrong with that. Like Lori said, if you want to be more turnkey, there's nothing wrong with that. And a good example of that, Lori's like me. She likes to run her property. She likes to be in control. But then we have another mentor, Rick. He's a property management on everything. So there's different styles. You figure out what's right for you.
Do we have time for more questions, Dave? We doing okay?
Our questions kind of come to
Yeah,
the,
do one more, Danielle, one more, then we'll go on.
let's see. Okay, so Kimberly asked, does buying investment properties affect your debt to income ratio?
Do you want me to answer that, Lori?
I can. I know that this is for Nayla and Wilson, but I can answer that. An investment property is a liability until you get a tenant in it that's paying everything for you. Then it becomes an asset. So you can continue to move on, keep collecting more properties. I had people at my former airline job would ask me, oh my gosh, how do you own all these properties and you actually quit your job, or you're working a less paying job than you used to? And I'm like, well, because they're not liabilities, they're assets to me.
Yeah,
Was that
and
basic enough?
a simple answer, Danielle, is this. It's easier to buy a rental property than it is a house you actually live in. Because if you have your job, it goes against your income and lowers your debt to income ratio. The way the banks look at these, they're going to count 75% of rents. So if the rent's $1,000 and your mortgage payment's $700, you make $300 cash flow, they're only going to count 75% of 1,000, so $750, $700, it's net positive. It does not affect your debt to income ratio, like Lori said, once as a renter. So this is why they can literally buy 10 houses and qualify easy. But I'll break down those numbers this weekend. I know I did that fast. Really simple, guys. Thank you so much, Nayla, and thank you for taking action. And Wilson, I know you said a lot tonight, but we appreciate that as well. You know, that's what physicians are supposed to do. They fish.
Yep. Oh, you guys are rock stars. You're awesome. Thank you so much for spending your time and
Thank
sharing your
you.
story.